2022.
Yes. April 2022. April 2022 question. Yeah, question 5C. April 2022, question 5C. Have you got any?
Yeah. 5C, yeah.
Yes?
Yes.
So for bank reconciliation, each time you are doing bank reconciliation, there's some item which affect the bank reconciliation. So like you need to have the updated cash book.
Yeah.
Updated cash book, so that you update the item which have not been reflected in the bank. So in this updated cash book, once you write a small format, so you will have balance draw down here, balance carry down here. What affects the updated cash book? The standing orders. The standing orders. Standing orders affect the cash book. Also bank charges. Maybe you have the bank charges. It is already reflected in the bank statement, but it is not in your cash book. So we need to update our cash book again. So here we will have bank charges. Bank charges. Another item which can affect the cash book is that dishonored check. When you presented your check, but that check the bank dishonored it, or they don't go through, so the bank will have to what? It will return back to you. So you need to recognize it again in your cash book. So dishonored check, it might be for supplier or a customer. So it will depend. So that at the end, you will have what? The balance carried down is updated cash book balance. So that now, that one now we reconcile. So the balance into the year, we now reconcile with the what? Bank balance. So we reconcile with bank balance. We reconcile with bank balance. So if you look at our question, that is question 5C, say on 30th September 2021, the cash book in bracket a bank column of the Gourmet Traders showed a debit balance of what? It has a debit balance of 530,000. When the bank statement balance on the same date had a balance of what? 608,500. And then on investigation, the following discrepancies were discovered. So we have the first discrepancy. A check received from a debtor of 92,000 and debited in the cash book was refunded by the bank stamped insufficient fund. So if the bank stamped insufficient fund, it means that that check is a dishonest check. It is a dishonest check because it is not enough for the bank what to fund your account because you don't have enough money. So the bank has to what? Dishonor that check. Then another statement, number 2, it said a receipt from a debtor that is 65,000 was entered as a payment in the cash book. Remember, a receipt is the income. So we debit what? We debit the cash book because we are receiving the cash. So, but now This accountant has do what? Has credited. It is a wrong account or a wrong side of the what? Double entry or accounting principle. So we need to reverse it back. And then another note. Note 3, bank charges. So bank charges, you don't even need to think to remember twice. You just put on credit, that is bank charges. That you can note number 4, checks totaling to 299 have been issued to the suppliers, but not yet been presented to the bank for payment. That is unpresented check. So it will affect our bank reconciliation. It will affect our bank reconciliation. It will affect our bank reconciliation. And another note is that a payment of standing orders. Standing orders, you don't need to even think twice again. Put direct on a credit side of the updated cash book. Checks amounting to 2 or 6 was received, debited in the cash book. The check had not been credited into the bank. That is uncredited check. It will affect again bank reconciliation. Number 7, a customer made a direct deposit of what? That amount into business bank account. So again, a direct deposit will affect your bank, your cash book, because a direct deposit, it is reflected in the bank statement, but not reflected in the what? In the cash book, because the customer has paid it direct to your bank account. That is it. So let's now, the requirement, they need updated cash book and bank reconciliation as at the 30th September 2021. That was the question for bank reconciliation for the last sitting exam. So let's now prepare the bank reconciliation. So if you have any questions, make sure again you ask so that so we will have updated cash book. So remember, this is question 5C. Updated cash book. Updated cash book. So in updated cash book, you will have balance product. How much is the balance product? Look at the statement. They said debtors show a debit balance of 530,000, while the bank statement show a 6 or 5,000. So we have a balance product at 30th, which is 530,000. Then look at note number 1. A check received from a debtor of 92,000 debited on the cash book was refunded by the, so we said that one is a dishonest check. So we dishonest check of 92,000. Dishonest check of 92,000. Dishonest check of 92,000. And then we have note number 2, a receipt from a debtor of 65,000 was entered as a payment in the cash book. So how do we record that that transaction? How do we record that transaction? How do you record that transaction? Note number 2. So can you try it? Can you try? The customer has paid you. Then you record it on credit side. It is an income. So you should what? When an income, we said an income, an increase in income, you credit the income account and you debit the asset account, which is a cash. But now, so we need now to debit sales. But if you debit the sales exactly 5,000, it means you are write off this transaction. You will eliminate this transaction. So what you do, you multiply this transaction by 2 because it is already here. So this transaction is already here. So for you, if you debit the same amount, it means you will be deleting this transaction. You will be deleting that transaction. So we need to what? To debit the double figure of 65,000. So we will debit 65,000 times 2. 5,000 times 2 ngapi? Is it 130? So we will debit 130,000 here. Correct that error. And then number 2, bank charges. We say bank charges specifically put here. Bank charges ni ngapi? Bank charges ni ngapi? 9,500. 9,500, that is bank charges. Bank charges. Bank charges. And then we have another note. Check totaling to 95 have been issued. That is unprecedented check. It will not affect the cash book, updated cash book. We go to the standing orders, note number 5. We put it here, standing order. Standing orders here, how much? 230,000. 230,000. What else? A check to that one was presented, so that one is it will affect there. And then note number 7. A customer made a direct deposit. So here we have direct deposit. A direct deposit, younger fee. 187,000. 187,000. That is the direct deposit. So get for me the balance. Get for me the balance. Let me get my calculator. Get for me the balance. So you take 92,000 plus 9,500 plus 230,000 inakuja 3. So credit side inakuja 3,315,500. What about the debit side? So debit side is more. So debit side is more. Debit side is more. So it will be 530,000 plus 130,000 plus 187,000. So this one's come to 847,000. So it means it will be the balancing figure here. It will be the balancing figure here. 847,000. So here we will have updated a balance. Updated balance you subtract from this one, it is 33,500. So updated balance is 51, 15. So it is 500. That is updated balance. That is updated balance. Okay, so we say balance on point 2. Why are you doubling it? Okay, so I'm doubling it because remember, like, so let me repeat again that note number 2 so that you know why I'm doubling it. The note 2 said a receipt from a debtor of 65,000 was entered as payment in the cash book. Okay, so you made a sales. You made a sales of 65,000 to customer. You made a sales of 65,000 to a customer. How do you record these sales? So to record, if it is so for you to record these sales, let me record these sales the way it should be before tuangalie huyu jamaa alikuwa amerecord aje. So utakuwa na two account, cash sales and sales account and sales account. So you will have two accounts, cash sales and sales account. You debit the sales, the cash 65,000. You credit what? This account, 5,000. You debit the cash account, 65,000. You credit the cash, how much? 65,000. So that's how you should record that transaction at first, on first instant. But that accountant ama huyo jamaa amerecord aje? Instead of debiting 65,000 akafanya nini? Credit what? Credit what? 65,000. That's why you need to do reconciliation to correct this error. So amefanya nini? Credit what? 65,000. Credit 65,000. Credit 65,000. So ukidebit the same amount to correct that error 65,000, utakuwa umedelete this transaction. So utakuwa umedelete this transaction. So what you do, you debit the double amount ya ngapi? 130, so that at the end uko na balance carried down hapa ya ngapi? 65,000. So this one is what should reflect in your bank statement. Your bank statement. Hope hapo may understand. Hope hapo may understand. Is it okay now?
Yeah.
Is it okay now?
Yes, it's okay.
So now, so having done the bank reconciliation, then now we can do our updated cash book. Then we can do our what? Our bank reconciliation here. Bank reconciliation. So you will have the name of that company, but me, I will not write the name. What is more important is the bank reconciliation. Do bank reconciliation. Do bank reconciliation. So bank reconciliation, you will say balance as per updated, balance as per updated cash book, balance as per updated cash book, which is 515, 500, 515, 500, 515, 500, and then you add unpresented check. So how much is our unpresented check? Look at note number 4. A check totaling to 299,000 had been issued to supplier, but not yet been presented to the bank for the payment. So that is unpresented check. That is unpresented check. Unpresented check. That is unpresented check. So we add bank unpresented check here. That is to what? 299,000. 299,000. And then you less uncredited check. So how much is our uncredited check? Look at note number 6. Check totaling to 206,000 were received and debited in the cash book. They have already updated the cash book. And this check had not been what? Yet been credited to the bank account. So we have not credited that one. Then that one, 206,000. So that here you get balance as per a bank statement, as per bank statement, balance as per bank statement. How much? 515, 500 plus 299,000 minus 206,000, which will be 608, 500. So that one should correspond to the bank statement. to look at hapo juu alikuwa ametuambia when the bank statement balance on the same date had a balance of what 605,500. So this should be your bank balance. Now we have done a reconciliation. Now we have done a reconciliation. So any questions on that on reconciliation? Because we don't know the custom, it might repeat the same question. It only change the figures and the names. So that's how they are doing. So that's how. Okay, my audio is not clear because I didn't carry my microphone, but for tomorrow classes I will carry the microphone. So sorry for that. So that is it. That is it. Okay. Now the statement of financial position for both companies, non-current asset, current asset, equity and liabilities, and non-current liabilities. We have the current liabilities. And then the ratios they need: number one, Roman 1, gross profit margin, net profit margin, the return on capital employed, return on asset, current ratio, asset turnover ratio, inventory turnover ratio, trade receivable and trade payable. Comment on the profitability for each company. So the comment for the profitability for each company. So if there is any question which is very easy in financial accounting is ratios. So once you know the ratio, the formula of ratios, then the question will be very easy. Okay, so we will go as per the requirement. Roman, so I will do for one company, then you compute for the next, the other company. So I will do for a green traders company. Green traders, a company, a green traders company. Roman 1, Roman 1, they need gross profit margin. So how do you get the gross profit margin? Remember, when we say margin, we are referring to sales. When we say margin, we are referring to sales. So we will have our gross. So we will have our gross profit over what? Sales. And remember, this one is a profitability ratio. So you must indicate the 100. So how much is the gross profit? It is the income statement. Gross profit, we have gross profit of 600. Remember, it is in thousand. Kuna gross profit of 600. How much is the sales? Look at the sales. Sales here to the all sales on credit, 3,000 times 100. So how much is that ratio? So you take 600 divided by 300, 3,000 times 100. So this one is 20%. It's 20%. Then you come to Roman 2. So ratio is very easy. Once you know the formula, they need what? Net profit margin. So how do you get the net profit margin? How do you get the net profit margin? The net profit margin will be the net profit. We divide by sales again. We divide by sales. So how much is the net profit? Look at the income statement. The net profit for the year is 120. For green company, the net profit for the year is 120. Sales is 3,000 bundle, and it's 100%. So how much is the net profit margin? You take 120, you divide by 3,000, times 100. That is 4%. That is 4%. Then Roman 2, Roman 3, they need what? Return on capital employed. We call ROCE, return on capital employed. How do you get return on capital employed? It is the profit after tax. Profit after tax, you divide by what? Capital employed. You divide by capital employed. How do you get capital employed? So you get what? Current assets minus what? Current liability. Current liability. You take the current asset minus current liability. How much is the current asset? Look at the balance sheet. The current asset for grid debtors is 966 minus current liability. Current liability to go now 183, 120, coming to 306. 306. So you take 966 minus 306. It's coming to 660. That is the capital employed. How much is the profit after tax? The net profit is the profit after tax, which is the same as 120. So you divide by 120. You divide by 120, you get how much? So it will be 120, we divide by 660 times 100, which is 18.8%. 18.8%. That is the return on capital employed. So make sure you know how to get the capital employed. So make sure you know how to get the capital employed. We go to the next. We go to the next ratio, return on assets. Return on assets. So how do you get the return on assets? So it will be the profit after tax we divide by total assets. Divide by total assets. Profit after tax is 120. We divide by total assets. Total assets, they have given us there. Total assets is 966. 966. So you divide by 120, we divide by 966, which is what? Times 100, which will be 12.4%. 12.4%. Okay, so we go to Roman, which one? Roman 5, current ratio. Current ratio. So how do you get the current ratio? The current ratio, you take what? Current asset you divide by current liability. Current liability. We already have the current asset here, 9. How much is our current asset? Sorry. This one to correct. Current asset here, oh yeah. Current asset there is 408. Sorry for that one. 408. That is the current asset. So 408 minus 366. This one is 42. This one is 42. That one is 42. So a minute.